But let's talk about SoFi for a moment. Got the position started here in the public count. I bought some shares recently in my Ally account, right? And now I got a position in the public count. I also started, which is kind of the granddaddy of them all. So 3,000 shares here to start, and paid $6.94 for those shares there. Okay. So in regards to SoFi, I told you guys at the start of this is a growth stock, but trading at very good value, right? And so what I see here is a company that if we go back to 2019, net interest income, which is kind of the holy grail metric for banks, right? Which SoFi, although it's tech related, it's online, it's an app, all those sorts of things, Galileo, it's still a bank, okay? So net interest income is always the most important for these companies. It took it from $329 million in net interest income in 2019 to this past year, $1.2 billion plus in net interest income for SoFi. And don't be surprised at all if that number climbs considerably more in 2024. The operating income, it actually went from an operating loss. If we go back to, this is just in the past few quarters, December 2022 quarter, they had an operating loss of over $37 million. They took that to a $51 million operating income in this most recent quarter. Net income went from December 2022, that quarter they had a $40 million net loss. They took that to almost $48 million in net income in this most recent quarter. So the numbers are increasing rapidly, right? If you look at their latest quarter, they beat on EPS, they beat on revenue, very nice beat on revenue, $22 million beat in terms of revenue, right? And then we look at the valuation of the stock, trading at, you're going to look at 2025 and 2026 numbers since it's a growth stock, right? And you look at this company, 2025 trading at about a 29, forward P based upon the expected 2025 numbers. The following year, 2026, based upon what analysts have, that's a 14 PE on 2026 numbers. And this is a company that in 2025, analysts had them growing 17% revenue, 20% revenue in 2026. Something just doesn't add up there, right? The valuation is just far too low considering the growth rates of SoFi expected over the next many years overall. So here we have SoFi currently, right? They have an all-time high members, and that number should continue to grow. They have an all-time high net interest income, and that number should continue to grow. They have all-time high profits, and that number should continue to grow. And the company's well positioned for really any economy. I looked at what, Anthony Noto's kind of positioned the company. I think he's positioned it very well for really any economy. And yet here the stock is at near all-time lows. Literally, SoFi stock's pretty dang close at this point in time to an all-time low. While everything in the fundamentals of their business is at all-time highs. So this is where the old saying, Warren Buffett about, in the short term, the stock market is a voting machine, and long term, it's a weighing machine. This is a perfect example of this. When you got a company's fundamentals all reaching all-time highs, and those all-time highs should continue to go further and further, and yet the stock price is near all-time lows. So that's where I look at a stock like SoFi, and I'm like, this is a pretty tremendous opportunity, and I'm willing to risk some. On a stock like this, right? And the thing to remember with me with banks is I don't even like banks. Banks are blah for me. Like 15 years in the market, I've only owned 3 banks. JP Morgan, Goldman Sachs, and now SoFi. So for me to ever own a bank, it's got to be a really attractive opportunity. And when I bought JP Morgan back in the day, I thought it was a really attractive opportunity. And by the way, it was. When I bought Goldman Sachs, I thought, man, this is a really attractive opportunity. And now I'm buying SoFi, and I think this is a really attractive opportunity. So for me to buy a bank, it's a big statement. That means there's got to be something here, okay? So we'll see where SoFi goes over the next few years. But I like that one. I'll continue to probably build the position bigger in the short term. And, we'll see where I take it. But, it's certainly not a stock I want to have my biggest position in. Or anywhere close to that. But is it a stock I'd like to own a lot more shares of? Yeah. Could I see myself owning 10,000 shares of SoFi in the public count? I could see that. I would love that, actually. Anthony Noto, SoFi CEO, went on Cramer last night. We're going to watch this clip here. He said some very important things in that one, so I want to go over what's going on there. Let's get into this.
Just feel that after the great run, and it was a great run, after the really terrific outlook you gave, after the stock was moving up, that you yourself hurt the stock, and it went down big, and people feel badly that they bought it at 9, only to find out that, something was wrong at SoFi.
Yeah, I think it...
First off, if you're thinking that short term in regards to this, then you're a trader. And if you're a trader, you know the risk of, doing stuff like that, right? Like if you're an investor and you buy 1 month and the stock goes down the next month, and you're mad about that, that's a little silly.
But understand why we did the convertible deals, why we did the buyback, and the benefits to shareholders that I don't think are truly understood by the market.
Well, this is your chance.
The first point is we did this deal from a position of strength. We just had a record 2023, over $2.1 billion of revenue, up over 30%, 40% growth in our members, our first quarter of GAAP profitability, over $400 million of EBITDA generation, and gave an outlook that was going to be for full year positive GAAP profitability in 2024, as well as continued strong growth in our tech platform, as well as our financial services business. And we're going to be more cautious on the personal loan business. What we saw was an opportunity from that position of strength was to lower our cost of debt. We had two pieces of debt that were quite expensive. One we did in 2019. It is a Series 1 preferred that pays 12.5% interest.
That's so good.
5 years out.
Ooh-wee. Hold your horses for just a flippin' flapjacking moment. 12.5%. Yeah, that's the type of debt, folks, you want to get rid of. 12.5%, get rid of that crap.
We issue it, we can buy it back in May. If we don't buy it back in May, we'll have to not just pay 12.5% interest, but it actually goes up to 15% interest for the next 5 years, and we can't buy it.
Okay, so in other words, it wasn't like you could play around. If you tried to think that maybe we'll go to 12 and we got to May, you would have, and it didn't go to 12, you could have been hurt. It was not like the risk was, hey, listen, it could go up to 20 here. It was the opposite, which is that you had to get this piece done.
Well, I would put it this way. We saw it as an opportunity to do it and have a negligible impact on our GAAP earnings per share, and also combined with a buyback, have it be accretive.
But did you think the stock was going to get crushed like this?
Let me finish. Have it be accretive to tangible book value per share by 8 to 10%.
Okay.
When you do a convertible, there is.
I appreciate Anthony Noto there. Let me finish here, sir. Don't just interrupt me, because sometimes Kramer and some of these other folks they ask them a million questions at once, and then you don't even get the first question answered.
Have it be accretive.
But did you think the stock was going to get crushed like this?
Let me finish. Have it be accretive to tangible book value per share by 8 to 10%.
Okay.
When you do a convertible, there is pressure on the stock from investors shorting the stock against the convertible. It's a delta hedge. That does happen. So there is typically 5 to 10% decline. But the reason why we...
Did you hear what that man just described? I think he knows a thing or two about finance. Holy smokes.
...is really important, because I think this is what will put some momentum back into the stock. First is we had this 12.5% debt. We also had another piece of debt that's about $500 million that we pay 7% on. So we're going to save between $40 and $60 million of interest expense a year by refinancing from 12.5% down to 1.25%, where the convert is, and from 7% down to 1.25%.
That's great.
Don't miss a second of Mad Money.
Okay. That's phenomenal, right? Absolutely phenomenal. That's the thing. People didn't understand this deal when I went through a couple of weeks ago. They thought it was bad news. And I'm like, this is good news. What are we talking about here? People really were convinced this is some bad news in regards to SoFi. And, I take it back to Anthony Noto. I take it back to his experience at Goldman Sachs, right? The investment bank of investment banks. And, obviously he has way more experience than just Goldman Sachs. But this man knows a thing or two about finance. And if he sees an opportunity, an arbitrage, if you think about SoFi back in 2019, it was in a whole different place as a company, right? They're going to have some debt from back then that was at very high interest rates, because back then SoFi was kind of I don't know if that's going to be around. Nowadays, SoFi's in a way different financial position than where they were back in 2019. Their financials are a night and day difference over the past 5 years. And so I think that's a little food for thought in regards to that whole situation. So Tesla stock up huge today. What's going on here? Well, two big game-changing things for Tesla are going on simultaneously, and really they've been developments over the past, I would say, 48 to 72 hours, okay? First off, huge for Tesla. So I tweeted this out about, if they still call it tweeting, I guess they call it posting now or whatever, but 23 hours ago, I've had multiple people tell me they're extremely impressed with full self-driving, version 12. They tell me it's unreal how much Tesla has improved FSD in the past few months. Very good to hear. And we'll get into the specifics in just a moment in regards to what's going on here, okay? But essentially, starting really Friday and throughout the weekend, massive amounts of Tesla customers were able to get the new FSD beta. Okay, and so all of a sudden, tons of people got this 12.3, which is probably the most hyped FSD I've seen in a long time. maybe ever. I don't ever remember there being so much hype around a new Tesla FSD ever. So that's automatically good when you got hype around it going in. That means the hype's coming from somewhere. That means it's likely people that were very early in testing it, talking with other folks. And so there was a lot of hype going into this. And so thousands and thousands of customers got access to this over the weekend. Okay. Michael Dell posted this here. He says, super impressive. Tesla FSD 12.3 is like a human driver. It is. And, that's a important person to say something positive like that. By the way, I thought this was just worth mentioning. This was motivational because I had to make sure that was actually Michael Dell's profile, and it was. And just something motivational for you guys. I started Dell Tech 37 years ago with $1,000. Revenues in 1984 were $6 million. Last year, revenues were $94.2 billion. Impossible is nothing. I appreciated that overall, okay? So here's what I'm hearing personally from folks. Basically, what they're saying, if I could just make it as simple as possible for everybody, okay? What I'm hearing from folks is basically driving is more natural than ever before, which there's always been a complaint about FSD since it basically came out that it wasn't natural enough. It drove too much like a robot rather than a human. And from what I'm hearing, this is by far and away the most natural driving FSD we've had. Also, a lot of folks are saying it's easier to trust. Now, maybe some of that goes back into if it's driving more natural like a human, it's easier to trust overall, right? And so that's a huge step in the right direction because for some folks, they have trust issues with FSD, right? And so if it's easier to trust, that's a huge win for Tesla. And from the other gist of it is basically Tesla's on this last 1% to 2% of driving now at this point in time. They'd got it down to the last 5%, but now it seems like the last 1% to 2%. Meaning essentially, if you have an hour-long drive, okay, maybe you have to help the car out for maybe 1 or 2 minutes out of a 60-minute drive somewhere, okay? So, and we could take that even down if it's a 30-minute ride, it's a lot less of a 15-minute ride. So that's great. We're on that very, very last leg at this point in time. So Tesla's clearly making a lot of progress here, right? Now, I take you guys back to what happened in the summer of 2023 this past year, right? Musk on the conference call, he basically said Tesla would buy as many NVIDIA AI chips as they could possibly buy, right? But, NVIDIA obviously has a lot of customers outside of just Tesla. This was specific out of Elon Musk. He says, we're using a lot of NVIDIA hardware. We'll continue to we'll actually take NVIDIA hardware as fast as NVIDIA will deliver it to us. Tremendous respect for Jensen and NVIDIA. This is Elon Musk talking, they've done an incredible job. And frankly, I don't know if they could deliver us enough GPUs. We might not need Dojo. That's intriguing, but they can't. They've got so many customers. They've been kind enough, nonetheless, to prioritize some of our GPU orders. I mean, here's Tesla spending fortunes of money on these chips, right? And along with other companies as well. And they're like, oh, I'm so fortunate. Thank you. You're so kind to send me these chips. Thank you so much for letting me spend $500 million on these chips, $200 million, $6 billion. Thank you. Right? Now, guys, real quick there, side note for NVIDIA. Is there ever something more powerful than what I just showed you right there? We have the richest man in the world who's basically saying, oh, you're so kind to send us your chips and let us spend our money with you. Is that not the most powerful thing you've ever heard in the business world? I've never seen anything like that. When Elon said that in the conference call, I was like, oh my gosh, NVIDIA's really got it like that. For Elon Musk to bow down and say something like, they've been kind enough to give us some chips. Oh, he's so kind. I'll put it like this, right? Imagine you go to McDonald's. Well, you go to McDonald's, no one's like, oh, I got to meet the chef back there in the back room of the McDonald's. I'm so thankful. Oh my gosh, you've been so kind to sell me this Big Mac here today. No one does that. Okay. No one does that. However, if Gordon Ramsay cooked you a meal, you would be like, oh my gosh, I'm so thankful for this. This is so awesome. How did I get so lucky? Gordon Ramsay's personally cooking me a meal. This is amazing, right? You'd be bowing down. But imagine you're another super famous chef and you're a super famous chef that's bowing down to another super famous chef, right? That's a whole different level of respect there. Whole different level of respect. Now, My guess is Tesla got their hands on these new NVIDIA AI training chips, right? Likely H100s, at some point in the second half of 2023. That's my guess. Maybe they started getting their hands on some in the first half, but I'm guessing they really got their hands on them in the second half of 2023, got everything up and rolling. Which means if you got your hands on the chips in the second half of 2023, then that means 2024 and 2025 are your huge years of progress. And to finish this last 1% to 2% of driving that needs to be finished, right? And to get FSD to the point where literally you don't need a human even in the seat, right? Because this is a last leg that NVIDIA's trying to conquer here. This last leg, NVIDIA needs to get, Tesla needs to get to the point where you don't even need a human in that front seat. It is that trusted. That's where Tesla's trying to get over this next 2 years. Okay? That's the only way robotaxi is going to take off, is if we can get the car to drive so dang good that it's better than a human by far and away, and you don't even need a human up in that front seat. You don't even need a steering wheel on the car. And so that's my thought process here in regards to that, right? Now, I posted this inside the private group. I said, you guys know how I have the idea of $99 a month for FSD, which I think is still like Tesla should go there over time. I don't know when they do that. Right now they want $199. People are used to always spending less than $100 on subscription. So, I think it would be good if we can get it down to $99 a month. But someone came up with a pretty genius idea, actually in the comments section of one of my videos. You might think I look at the comments. I do. I read through the comments. And by the way, thanks for all the comments on the reaction channel the other day in regards to my elbow. I appreciate that. But someone came up with a pretty genius idea. First month free. I think that would be so smart, as basically everyone would at least give it a try. Plus Tesla would get massive amounts of data from that. Management needs to get on that, in my opinion. And I think, yes, it's, free month subscription is genius. Get everybody used to using it. Get everybody to try it out. Worst case scenario is people try it out and they don't like it and they cancel. Okay. But Tesla still got a bunch of data from people using it over that month, right? Which still helps train the AI models. See where I'm going with this? And so I think Tesla needs to get on this ASAP. And I think there's going to be a lot of people that will be pleasantly surprised by what they see in FSD and go ahead and say, oh yeah, I'm going to stay signed up for this. This is pretty awesome. I like this experience overall, right? But they got to do the first month free, in my opinion, if they really want to scale it to some crazy numbers overall, right? So we'll see where that happens. I'm hoping at some point this year, they go ahead and adopt something like that. If they don't do it this year, I hope next year, because a lot of people they're uneducated on FSD, or they're like, scared of it, or, free trial helps out tremendously in regards to that, right? Now, the second thing that happened that's absolutely huge for Tesla. Look at this. Tesla stock rallies as prices for Model Y EVs will increase in April. Oh, baby. Okay. Who called this? If you guys watched my Tesla video I produced for you guys, 4 days ago or so, is Tesla stock in trouble? We spoke super in depth across the board in regards to Tesla, and I told you guys I think margins will bottom in the first half year of 2024, and they'll increase in the second half. And why did I tell you that? I told you, I gave you a bunch of different reasons of bringing down cost, and then one of my other reasons was, guess what? They're gonna start increasing prices again. And a lot of people thought maybe I was crazy in regards to that, or at least some people thought I was crazy, and now people are like, oh, yeah, maybe Jeremy was onto something there. Maybe they are going to start increasing prices. And guess what? That's what it looks like it's going to be the situation. They're going to start actually increasing prices again. And it won't even have to wait till the second half of the year. They're already going to start in the first half of the year, right? Which means margins will bottom in the first half of the year, just like I said, right? Plus, Cybertruck, one of the other big reasons, Cybertruck right now is going to be likely a headwind to margins. In the second half of the year, I think Cybertruck's going to move to being a tailwind to margins. And so that's going to be, or at least kind of a neutral in regards to margins overall, which is going to be very bullish for Tesla overall. So, what I said there, I think it's starting to already come to fruition a little bit. Now, I was buying Tesla stock on Friday. And if you're part of my Patreon, that's linked in the description, you got to see that. You got to see the stocks I was buying, because you get to see the stocks I'm buying and selling every week. And Tesla was one of the stocks I was buying, right? Now, this is looking at the public count, my Tesla position, which is my big Tesla position. It's pretty bullish when I'm buying Tesla. I'm only down, I bought this stock on and off since 2019, and I'm only down on one set of lots ever in regards to public count for Tesla overall. Every other one, has always been a moneymaker. So whenever I'm out there buying Tesla stock, it's usually one of the most bullish signs you could ever imagine. Let's just put it that way, because I understand this company on a high level. I've understood it for a long time, and I know when I'm getting very, very attractive pricing on the stock. And here recently, the price has been very, very attractive. I'll just put it that way. So, the moral of the story is Tesla's in a great position. FSD continues to make tremendous progress. And in a time period where some are giving up on it, I think they're making the worst decision with giving up on FSD now, because I believe over this next year, the progress is going to be tremendous, and I wouldn't be surprised if within a year, it's driving way, way safer than a human driver overall, which is going to bode very well for insurance rates as well, because, man, insurance rates are going up. And by the way, your insurance is about to go up more in a few months. I know. Don't ask me how I know, but I'm just going to tell you, your car insurance is going up in a few months, okay?